Hey, good afternoon. Welcome back to the Genius Multi channel. Let's take a look at some news, headlines, some charts, talk about metals and what's going on in the world. What you see there, the crashing Bitcoin chart. The shorting guys that we talked about coming into this, they've only been operating for it's less than a week now, right? And looks like they might be doing what it is they do. Doing the futures, doing the shorts, manipulating, crashing, slamming, and just being overall cokeheads of Wall Street, which it's good to see, that they can still do coke and zeros and ones and in the digital world. We did talk about this in a couple of videos back last week. I'm not going to rehash the issue too much, but just wanted to mention that it's happening. Looks like it. And this is breaking news. I received a message via my cell phone moments ago while putting this video together from a friend who notified me that Coinbase had tweeted they are adding Bitcoin Cash to their website, immediately causing the price of BCH to skyrocket rapidly and causing, well, some people believe, causing Bitcoin Legacy to plummet rapidly as money flowed from Bitcoin and other alternative coins into Bitcoin Cash at this time. So it's interesting things moving about, lots of moving parts. Gold sold off a little bit from where it was yesterday. Remember, we were watching it hang around that 1266 level. And of course, as we come towards the new year, there's always predictions about where metals are going to go, where the markets are going to go. And we looked at one trader that called for gold to hit 1700 next year. And that is possible, very likely. Let's look at what the dollar's doing. Let's go talk about the dollar because there's also predictions about where the dollar's going to be heading into 2018. And we'll take a look at the charts for both the gold and the dollar, see what's happening. Take a look at this chart for me. Dow priced in original dollars and in ounces of gold. 1965 divides the real money bull market era from the Fed notes bear market era. And then you've got the peaks above the blue line indicating high asset values and low gold prices. Okay, and you've also got the black dots there. Those denote daily closing extremes. Pay close attention to, again, those peaks above that blue line. And then look at the Dow gold ratios. What's taking place, how many ounces of gold it takes to get into one share of the Dow. We're going to look at that real quick, and I'm going to read what this author has to say and take a look also at a dollar chart immediately following this chart. As this chart below shows, the US dollar is currently settling within a flag formation that could result in downside price action below recent support. When we consider the first chart showing the price of gold being historically very cheap and the ratio being above 17, we must assume that any downside price activity in gold is a blessing right now because these levels have not been seen since 1999, 1965, or 1929. In other words, this is potentially a once-in-a-lifetime opportunity for investors. So couple that information, the Dow Gold ratio, what it currently is, dollar weakness, the dollar chart, where it could be headed. We see here another top trader saying why the dollar is headed lower. The buck has been struggling since early November. The last time we took a look at it, we were willing to give the dollar the benefit of the doubt. On the chart, the US dollar index had violated its pattern of higher highs and higher lows, but it was still trading above its 50-day moving average. The momentum was still leaning bullish, and the buck looked to be settling up for a bounce. That bounce ended abruptly yesterday. The dollar fell by 0.69% yesterday. That's a big one-day move for a currency. It closed below its 50-day moving average. The dollar has formed a lower high on the chart, and there's an even more bearish pattern developing. Take a look. We read that this chart is forming a head and shoulders pattern. This is a bearish formation that usually indicates the reversal of an intermediate term bullish trend to an intermediate term bearish trend. We also see the Fed's new inflation measure moves beyond consumer prices. This full article is on Mises.org, an Austrian economics website that always has a wealth of information on topics such as this. The Fed's new inflation measure moves beyond consumer prices by Ryan McMacken. If you've been shopping for real estate or stocks lately, you might be wondering how the Fed gets away with all that talk about how inflation is low, muted, or below expectations. The reason for this is the Fed largely bases policy on consumer prices rather than on a broader measure that might include a variety of assets. The Fed often even excludes food and energy from its inflation measure. That's always boggled my mind. I don't understand how that is even possible. Needless to say, this leaves much to be desired from any true measure of inflation. As Brendan Brown has explored multiple times here at Mises.org, asset prices are a key indicator of where we are in the business cycle and are essential in evaluating the real effects of monetary policy. Harvard University professor Martin Feldstein stated in a recent Wall Street Journal commentary that, quote, the combination of overpriced real estate and equities has left financial sector fragile and has put the entire economy at risk, unquote. If policymakers did not heed this advice, his advice, odds of another boom and bust asset cycle will be high, and this time they will not have the defense mechanisms they had after the equity and housing bubbles burst. Hello, Kitty, who's walking behind the computer. Well, as currencies weaken, as economies become threatened, the governments begin to get nervous. How are they going to control the people? How are they going to corral them, take their wealth, and manipulate where money goes? Well, there's new rules for cross-border cash and gold bullion movements. War on cash continues and expands to affect non-criminals, including gold owners. New definitions of, quote, cash to be drawn up by EU to include gold and precious metals. Claim cash and gold bullion, often used for criminal activities such as money laundering or terrorist financing. Legislation will allow authorities to seize assets from those without a criminal conviction. New rules usurp those currently in existence since 2005. That's not that long ago, 12 years ago. They are ramping up the efforts to control money and where it is and who has it. I'm going to interject here that this is part of the motivation, I believe, for what we see in the cryptocurrency world. I think people are hiding. They're trying to hide wealth. People are running from this type of behavior. And I'm going to put a video out later today on Gresham's Law, the way in which good money displaces and chases away the bad money, or the good money gets hoarded out of existence and hidden, while the bad money is forced to circulate merely by government decree. The ironically named European Parliament's Civil Liberties and Economic Affairs Committees have backed plans by the European Union to introduce tougher checks and controls on cash entering or leaving the region. Currently, individuals are required to declare cross-border cash sums of 10,000 euro or more under the first Cash Control Regulation, CCR, from 2005. A new decision will repeal the CCR and allow authorities to seize cash below the 10,000 euro threshold should criminal activity be suspected. We suspect it. According to the European Parliament news website, MEPs have agreed to widen the definition of cash to include gold, precious stones, and metals, as well as anonymous, prepaid, electronic cash cards. Enable the authorities to impound cash below the 10,000 euro threshold temporarily if criminal activity is suspected, and make it mandatory to disclose unaccompanied cash sent by cargo. The justification for these changes? They say the current legislation is riddled with loopholes. These loopholes apparently make it very easy for money to be laundered across borders, especially as criminals regularly move amounts below the 10,000 euro limit. Large sums of cash, be it banknotes or gold bullion, are often used for criminal activities, such as money laundering or terrorist financing. With this legislation, we give our authorities the tools they need to improve their fight against those crimes. Maddie Delval, MEP. This is very interesting news indeed. Basically, we're moving into an Orwellian society where they can check everything. Cash will still be one of the means where you could go somewhere and buy something and nobody would really know about it. Now they want to abolish it. Mark Faber. Anonymity is important. Privacy, or as some of you say in other parts of the world, privacy. It's important. Some people value it. And we will always, as humans, seek a way to maintain our privacy. And you know what? If criminals are doing money laundering or funding this or funding that, it really doesn't bother me a whole lot. And what bothers the government, I think the only way it bothers them is because they don't have their hand in it. Because they move some money on their own quite frequently in cash. Remember the one video I did where I got demonetized because it was unfriendly? YouTube and certain authority figures did not like the video in which I equated certain government entities and their affinity for cash and moving it about the world on pallets in large military cargo planes, how that was very similar to other criminal type activity that they seem to frown upon. That video still exists in the video files. If you ever get a chance to see it, I'll put a slide up of what it looks like here, because that video is one of the ways you can see what happens to me when I speak a certain way and how YouTube likes to take my monetization away for being unfriendly towards our overlords. Now, Sal covered this in a great video, so I don't want to go into too much detail on it, but I did want to cover it if any of you hadn't seen Salivate Metals coverage on the same story. World silver production, 3 charts you won't see anywhere else. The rate at which global silver production increased over the past century is quite astonishing. When Columbus arrived in America, 1492, the world was only producing 7 million ounces of silver a year. Today, the world's largest primary silver mine, Fresnillo's Soixto mine, produced 3 times that amount in just 1 year, 22 million ounces in 2016. Yes, we have come a long way in 500 years. Just think about that for a minute. One silver mine last year produced 3 times the global amount in 1493. According to the U.S. Bureau of Mines' 1930 report on summarized data of silver production, the average annual silver production in the world from 1493 to 1600 was 6.9 million ounces. If we look at the following chart, we can see how world silver production increased over the past 500 years. And here you can see the chart that we're talking about, world silver production, average annual 1493 to 2017. Of course, technology, we have Caterpillar. They didn't have D9 Caterpillars back in 1493. And once we learned how to use those and diesel engines, production increased dramatically. But there you see 1493 to 1600, 103 times, 722 million ounces. Unbelievable. And then 1900 to 2000, 2.6 times, 722 million ounces. And you can look there at the production charts, millions of ounces. If you look at 1493 to 1600, just 6.9 million ounces. So we've come a long ways. And then if you look at the dramatic change at the Industrial Revolution, however, 1900 to 2000, 2000 to 2017. So in just 200 years, with the onset of industrial machines, mechanized equipment, the discovery of new worlds, new continents, it changed everything. New mountain ranges. That intersection of invention, innovation, as well as new land in which they could extract much more silver than ever even imagined. In the current period, 2000 to 2017, the world has produced 103 times more silver per year than from 1493 to 1600. However, the next chart shows the total silver production for each period. From 14 to 1600, the world produced a total of 747 million ounces of silver, compared to 13,000 million ounces. That's 13 billion with a B ounces in just 18 years from 2000 to 2017. Here's the chart, world silver production 1493 to 2017. Let's look over there at 1493 to 1600, 747 million ounces. And then again, I like to just skip right ahead to the Industrial Revolution time period. I mean, you look like the whole time period from 1493 to 1800 even. Just those three little towers, very small, not a whole lot of silver. And then you've got total world silver production 1493 to 2017 representing 49,350 million ounces. So 49 billion ounces of silver produced from 1493 till now. And of that, you can see the majority of it is from 1900 to now. You've got 10,338, 17,061, 13,000. Unreal. Those are in millions. So it's 10 billion ounces, 17 billion ounces, and 13 billion ounces. That's it's quite a lot of silver there produced in the modern era. Now, the reason the last silver bar on the right of the chart we just looked at is lower than the previous one is it has to do with the comparing 18 years worth of silver production, 2000 to 2017, versus 50 years, 1950 to 2000. So it took 50 years to produce 17 billion ounces of silver during the 1950 to 2000 versus it was 13 billion ounces of silver in the 18 years from 2000 to 2017. So that's an interesting statistic in itself, that from 2000 to 2017, we've produced almost as much silver as they produced in 50 years. The last chart's quite interesting. If we go back a little more than a century, the United States was the largest silver producer in the world. In 1915, the U.S. produced 75 million ounces of silver out of the total 189 million ounces mined in the world that year. I'd like to wave hello and welcome the new subscribers. Looks like we've got about 1,100 new subscribers recently in the last several weeks. And I'll wave, I guess, goodbye to the 191 that have left for whatever reason. Looks like if I go into some of the analytics, it looks like some of you have left recently. I can guess why. It's because the discussions most recently regarding cryptocurrency. And yesterday, the video that I put out talking about the store of value, money, what it is, just discussing my path here and things that I've been thinking about over recent events and discussions I've had with friends. By sharing that information with many of you, and I don't know how many of you actually sat through the entire video or not, but many of you left, it looks like, after viewing or during the time period in which that video was introduced. So that's unfortunate. Hopefully you can come back at some point. We'll always be here. But there you can see those of you who left recently due to the most recent video, that's okay. You know, no hard feelings. It's unfortunate that by me trying to view things objectively or from different angles, by acknowledging certain facts and changes in a dynamic and ever-changing world and timeline, some of you have left the channel. And I hope if you hear this message, you reconsider it, because there was a lot of good stackers, I'm sure, in that bunch of, I don't know if it's 101 or 50 that was part of the last video. I think it's 100 there total. Some of those are closed accounts too, so it's not these numbers don't reflect everyone that left as a result of the previous video. However, I do know some of you don't like covering that type of material, and like I've told you in the past, it's the timeline we live in. It's the news of the day. It's here. There's nothing we can do about it. You, I, nobody is going to destroy cryptocurrency. As much as that word might cause some people to trigger, it's there, it's here. Blockchain's here. And the more we see government pressures towards controlling the movement of money, cash, precious metals, like we talked about in the early part of this video, the more we will see people run and flee towards cryptocurrency. If anything, it will gain more power and more energy as a result of government controls and clampdowns. I hope you can consider that. I've never held anything against either side of the spectrum here. And if anything, I've been more harsh towards the crypto crowd in previous videos than I've ever been towards the people that at this point are now leaving the channel as a result of discussing crypto because of its relativity in the news. And I think, and I've observed many people in the cryptocurrency community that are a part of this channel, there's a large portion, about 38% of you I think, that stack metals and are involved in cryptocurrency, have been much more reserved in your emotions when it comes to reacting to my opinions expressed on various topics. And another interesting point is several of the people, I keep them anonymous. I do. I help protect everyone who's on this channel and the different personalities on here that I engage with and friends. I know several people that hold more metal than likely any stackers you know that are also partially and well invested in cryptocurrencies as well. So being a dedicated stacker, understanding economics, understanding the value and role of precious metals doesn't have a whole lot to do with one's stacking. And if they hold metals or if they believe in certain things about precious metals. My whole goal with this channel from the beginning, years ago, was to express my journey, my path here with wealth preservation, ways in which I can expand it, experiences I've had, and I'm doing that here and now. I'm sharing with you guys my experiences, my growth, my knowledge, what I've learned, my mistakes, my failures, because everyone makes mistakes. We all have our failures. And I do that with the hopes that people can learn from them, but also maybe glean a thing or two out of it. I know this channel has been a benefit to some people, and that's my whole goal here. I'd like to see every one of us be able to expand our position in metals, because that's ultimately my goal, to attain a monster box of gold eagles. If by dabbling a little bit, putting a little bit of my Steam It dollars, which I earn from Steam, and other things into some cryptocurrency, if that were to somehow create an increase in profits to where I could translate that into more precious metals, in no way to me is that a bad thing, because it's going to benefit me in the long run in my family and create more financial stability in doing so. And I wish that some people could see that. That's what I'm trying to express here and trying to help others do in that way. I could share with you some recent events that have worked out positively for me based on these decisions. And I would like to see others in the stacking community be able to acquire a foothold in some cryptocurrencies, gain some profits, and translate those via APMEX or SD bullion, JM bullion, Provident Metals, whoever receives and takes cryptocurrency and payment as a cash payment for metals, and take delivery of physical metals based on their growth in cryptocurrency. Now, I haven't done that yet, but that is ultimately my goal. If I can generate some form of a profit in getting a little bit of these early on, as I do believe we are in an incipient stage, at a very early part of what is a growing and expanding universe called cryptocurrencies. There are, again, if you watched the whole video that I put out last night, severe concerns that I still hold, reserves. I do have reservations, I guess you could say. And I think those eventually might be somewhat overcome. Ultimately, the ultimate store of value, the ultimate store of wealth, the most indestructible form of capital will always be gold. So to the more patient crowd, those that are still sticking around on the most boring channel on YouTube in a 25-minute video, those of you that are supporters of the channel, the patrons over on Patreon, all of you that like and share and subscribe and express motivating support to me and what I try to do here on this channel, I'd just like to say thank you. I appreciate each and every one of you, and thank you for being part of this channel. Have a good night.